Welcome to all the viewers on ET Now. You're watching Markets at Lunch right here in ET Now. I'm Ajay Sharma. The market is not really falling off the cliff, but 0.5% cut after 3 good days can be seen as a profit-taking bout as far as the market is concerned. Well, we had some good short covering rally in the market. We also had some fresh buying coming in, and we saw the DII numbers actually come in. So now we are looking at some amount of profit taking which is actually setting in. But let's get in the guest of the day to talk about markets. Kush Katakia is here with us right now to talk about the markets. Kush, how are you analyzing the market? After 3 good days, some profit taking setting in. But do you think it's fertile for buying right now?
Thanks, Ajay, for inviting me to your show. Well, I think what we saw last week after the government announced some kind of impetus, markets have been reacting pretty well to that. But I think what markets wants to see is that it needs a little bit more of that. And what we have seen in the last probably 1.5 years, now people are saying, like, whether it's a cyclical slowdown or whether it's a full-blown recession is something which is constantly debated. So at this point of time, I think we'll have to see the earnings for the next at least couple of quarters to gauge whether this kind of impetus has actually helped the market and whether this rally can sustain or not.
Kush, you are also in touch with a lot of big HNIs in the market. How is the sentiment among the big HNI community? Usually they have more tilt towards mid caps. And of course, they do have large cap as well, but more to anchor the portfolio. Is there willingness among big HNIs to come back into the market and pick up beaten down mid caps or not yet?
Not exactly, but one sees that certain names are kind of finding favor.
Okay.
Names which have probably announced better results, like if you see great MNC pharma stocks, or probably say some private banking stocks, those kind of results which have probably
Earnings.
Good earnings, who have announced good earnings are probably finding favor among HNI investors. But if you actually ask me, within small and mid cap, there is still very little confidence amongst all sort of investor categories.
Right. Kush, stay with me. My colleague Vivek is here to talk about cement space, and I'd like your opinion on cement in particular. Now there is news coming in that just like the auto sector, even cement stocks may be required to take some amount of production cuts to adjust to the lackadaisical demand in certain areas. My colleague Vivek Iyer is here to get us exclusive details of what's happening in that space. Vivek?
Well, just across how we are seeing kind of slowdown across most of the industries, the cement pack or the cement industry is no stranger, or it's not being kept out of the loop. In fact, what we are understanding from sources at this point of time is that, the demand is so poor, so weak across most of the regions. Remember, this particular season is also a significantly weak season, given the fact that monsoons always hamper construction activity. We understand that the price fall has been so intense in the last 3 to 4 months that most of the cement companies who are already facing labor issues and already facing a lot of construction issues on the back of flooding situation are planning to undertake production shutdown. Now, just to give an idea of how this particular situation has been going, in the last 3 to 4 months, cement prices across India have fallen by an average of 11 rupees per 50 kg bag in across most of the regions, and this is an all India price average that you're looking at this point of time. Across Andhra Pradesh and Telangana, the price fall has been quite exaggerated. We understand a 50 to 60 rupees per bag cut is the kind of cut that cement companies have been forced to undertake due to the severe lack of demand. Overall, if you're talking about the cement pack and companies that are affected mainly due to this particular plant shutdown, you could look at companies like ACC, Ramco, as well as Dalmia Bharat. A lot of them have significant presence across South India, and it'll be interesting to see how this particular situation pans out and going forward whether demand can revive.
So that was a take on cement. You also like the insurance space, right? We were talking about it. In fact, the data shows that in the last 3 months, insurance names have been one of the most added sector by most DIIs as well, and you have been bullish on it. In fact, we had management of HDFC Life on the channel. very bullish commentary. What kind of insurance stocks do you like, and what kind of perspective do you have in there?
See, Ajay, I feel that since many years, like, we have seen since 99, like consumption was the top rated amongst the benchmark indices, and BFSI was at number 5. By 2009, BFSI was the biggest weightage amongst the Sensex and Nifty, and by 2019 it has become by far the largest. So within that BFSI space, I feel insurance as a sector, I think that will command a huge weightage over the next 5 to 6 years. So at this point of time, they may look a little bit expensive, but I feel that the opportunity size in insurance is such huge, be it general insurance or life insurance. We've got some marquee names listed, and probably a few more to come, I think, in the coming few years. But the opportunity is so large that insurance, I feel, is going to be a big part of the weightage in the Sensex and Nifty. So it makes sense to hold some kind of weightage one must have in the portfolio.
Right.
Yeah.
In fact, on that note, let's also hear out some interesting management outlook from HDFC Life. Very bullish commentary coming in. The stock, of course, has been doing very well.
HDFC Life has always believed in the principles of strong growth and strong profitability. Market share is an outcome. Reason we are not only focused on market share is because we do believe that sometimes it leads to a lot more short-term focus on perhaps not so good quality business. So we will continue to beat overall industry growth, but not necessarily be too fast on whether we are number 2 or number 1 or what is the numbering in terms of profitability and as well as market share. I think that the market realizes a couple of things. One is that insurance companies have a much longer horizon in terms of everything that we do. And so most of our assets are held to maturity as against expecting to give a short-term return or a lot of short-term focus. Because longer term, the fundamentals of Indian macros are pretty strong. And worldwide we are seen as a very strong emerging market. So nothing's changed as far as that is concerned. Second is that the product innovation, especially the private sector life insurance companies, including HDFC Life, have been known for, especially in the last 5 years or so, means that the understanding of what insurance products can offer, which are different from only investment related insurance products as it was known earlier, is becoming more and more apparent. So protection is something that insurance companies are beginning to focus on, and we've been the market leaders in that space. Over the long term, yes, no reason why, with the continued focus on protection, and this is all 3 tenets of protection, mortality, morbidity and longevity, we should inch upwards, taking a leaf off China's books. It will take some time, but the continued upward trajectory should continue. However, on a full year basis, this will straight line somewhat. It will certainly be higher than where we ended last year, but never.
So Kush, you also speak to a lot of business owners and industry participants, not only the large cap or the extreme small cap, but middle level people. When you speak to them on ground, how bad is the situation in terms of growth, in terms of availability of working capital or cash and liquidity? What is the feedback you're gathering when you speak with them?
See, honestly, the kind of slowdown which we have seen has particularly impacted the small and the medium enterprises very hard. So what is happening is, like, a few of our clients who belong to this industry are saying that they, for the foreseeable future, they are not able to actually see that when this liquidity crunch is going to end. So they have been talking to their corporate clients also, wherein, like, there has been some slowdown, order slowdown, payments have not been released for some time, plus there are GST issues which they are, that is also contributing extremely badly to the kind of slowdown we have seen, the crunch. So honestly speaking, it is pretty bad on the ground.
Right. In fact, we also, my